It's Louis here. I'm finally back with another Elrond update. It has been a while. Let's just dive into this video. If you enjoy it, please like, share the video so it brings us up for the algorithm so you can see the Elrond updates when you just type in Egld or Elrond. And yeah, again, leave a comment if you enjoy the video. So let's get on to this. So if we turn on the drawings now, we can see on the daily it's not looking good. But there's actually some levels which we will look at in a bit more detail. If you're holding above it, it's bullish, which is very good, and I'll show you some levels that we can't lose at all costs. So thank you guys, please enjoy. So we have this descending triangle over here which I was able to give you. We can get rid of it, but the reason why I wanted to show you this descending triangle is because this is what's basically created this absolute capitulation, and it's crazy to hear people saying we haven't seen that yet. Look at that right there, but which happened in just, you know, a very few months. So in under 3 months, I think it's happened March until June. So yeah, in and around there. Basically, once you lost this low, our target was the 1618. You can see you actually hit that. And so what happens when you do meet this 1618 target on any time frame? Go check this out in your charts. When you hit this 1618, what you're trying to do is reclaim that, which is the 1 fib level. And this is what I always tell you on this channel. So what you wanted to see from here going forward is a reclaim of that, confirm it as support to see bullish continuation. But the fact that you closed under, so you never even managed to reach it. So this is why I tell you, whenever you meet one of these three targets, you get this retracement, and it has to close above that if you want to go up. Listen to how I'm saying that. It has to close above the 1 fib level if you want it to go up. So if that's not happening, you're not going up. So if that's the criteria for us to go up, and it's not really likely, then what's the most likely? Don't fight it. The most likely thing is that you're going to get continuation of the trend you're already in, and that is a downtrend, because by closing below this low, you've made the lower low. So the most likely scenario is continuation. Yes, you can invalidate that scenario of continuation by reclaiming that 1 fib level and starting to head back up, but it's not the most likely. It's not the most occurring scenario. The most occurring scenario is once you lose the 1 fib level, you hit the 1618, you come back up and fail to reclaim the 1. So it basically means that you should always be looking for shorts once you lose the 1 fib level, unless you reclaim it and you need confirmation. Not only do you need to get above it, you need to continuously hold it and then break that high, like this high here, go higher and continuously do that, basically like that. So because we fail to get above the 1, it opens up the possibility, much larger probability chance of heading down to these two levels. And your 2414 is always your final target, but it doesn't mean you'll reach there. So this what it's just like here, the 1618, you could have stopped at the first one, this 1.272, and still fail to get above the 1 and continue. So it just depends on the momentum, guys, and no one knows the momentum, of course. The momentum is shown by how big the candles are, basically. This is how you'll be able to tell the momentum, basically. So once you lost this 1 fib level, look at that big red candle piercing through the 1.272, telling us, yeah, most likely going to continue, because there's so much momentum. This candle is so big, it doesn't really make sense for it to just, oh, sorry about that, guys. It doesn't really make sense to just completely like flatline and not do anything after such a big candle. So yeah, this is why we did get another big candle that eventually did wick back up. So yeah, we saw the depletion of the bearish momentum in that short term. With that depletion, what you need to do is reclaim that 1 fib level over here, but you failed to do so. This is why we saw the continuation to these two targets, and that's your final target. So when you do hit this final target, you should expect a big retracement. So if I just get rid of this now, let's focus on that retracement. So from that final 241 target down there, $37. So basically going forward, you know, we're going to try and find you the level. So if we're losing that level, we know, okay, we're definitely going to lose 37. I'm going to give you a level above 37 as a level that if we lose, yes, we definitely know 37 is going to be lost. And that's that green zone over here. So if I'm looking for a pinpoint level, it's not really going to be the most pinpoint for you. So it's going to be in around 46, but also down here. So 45 to 46. I can't get a line that actually covers both. I could just adjust this box a bit lower, just like that. So let's just say 45. You don't really want to be closing below this 45 to yeah, this $5 range, 45 to 50. But if you want an exact point, don't close below 45, because if you do, I'm telling you now, you're going to lose 37. So you can see what are we doing right now? We're trapped within a range. So after bottoming out, you can see we came up, you found support right there, you came up, found a support again on it, again on it, again on it, well, just a miss, but again on it here. But you can see that this is our range low and this is our range high. We did have some bullish targets prepared because we had a double bottom over here. And so what we wanted to do is break out. We did, and we back tested at support, which is so bullish. But all you need to do is break that high, and you failed to, and this is why we actually came back down, validating an M pattern. We'll get into that M pattern for you right now. So by losing this level here, right there, $61, by closing a daily candle, this daily candle right there below $61, it basically validated downside back to this. You have an M pattern over here, double top, because with this green candle you failed to close above the wicks, that red wick. What we need to see, even though the wick there, that green wick went higher than that red one, you can see with the wicks you got a higher high, but you need to see this body here closing above that right there, and we just did not see that. And so when you came down, you say the same thing. If we're closing below this, then we're going down. Just like if we're closing above the body and the wick, we know we're going up. So if we're closing below the body and the wick here, yeah, we definitely know we're going down. So here we have the M pattern validating back to the support of the range, and so that's where we are right now. We do unfortunately have some sort of descending triangle going on, which is bearish continuation. So again, if you want to see bullish continuation, and that should happen as long as you're above 45, you can even come down to say 42, but I want to give you a pinpoint. Let's just say 45. So as long as we remain above 45, we should have another go at the range high. Again, if that fails, we know if you ever lose that, we're going down, and we're going to lose this $37 level, and we need to see where are we on to next. So I'm going to go to the monthly now, because there's some levels on the monthly chart which we cannot afford to lose whatsoever if you want to see a bull market in the next year or so. So if you want to see a bull market in the next year or so, you need to hold $22. Why? So when we bottomed out here, we had this first impulse, came back down, and this was our wave 2 correction out of Elliott wave theory. And in Elliott wave theory, you have 5 waves. So I don't know exactly where, if anyone can show me an Elrond chart that has more data than this, that would be so greatly appreciated, but I can only go off what I can see, and I'm not trusting a candle that looks like that. Whenever I see a candle on a chart like that, if I find a chart that actually has the complete history, that's always been a anomaly. That's never actually appeared on the real chart. So I'm going to go from this bottom over here where I can see red candles, and from that low we have this wave 1 over here, and the wave 1 actually closed at actually went up until 42, but closed in around $21. So yeah, I've just rounded it a bit to 22 because we had some support wicks over there. Let me just get rid of this now. So basically your wave 1, wave 2, wave 3, and this is your wave 4 pullback, exactly the same as wave 2, and then we'll get this final 5th wave, as long as we can hold above $21 on the monthly time frame. And where are we now? We're at $51. So the fact that we're at $51 and we are above 21, that is bullish on the monthly time frame. Very long term, we're still good. So that's what you need to do if you want to keep the long-term future of Elrond amazing, looking bullish, then you have to remain above $22. So if you appreciated that video today, please like, subscribe and comment. And again,